Welcome to Tesla Stock Daily Drive. I'm your host, Dusty, where we delve deep into the day's financial markets with a special focus on Tesla and broader economic trends. Let's jump into the world of finance. Today, the major U.S. stock markets ended on a positive note. The S&P 500 climbed 0.6%, hitting 5,970 points, while the Dow Jones made its fourth consecutive gain, rising by 0.5% to over 42,500 points. Over at the Nasdaq, things looked up with an 0.8% increase, driven by technology sector gains. Chipmakers like Nvidia and Broadcom were the stars, both appreciating around 3%, but not everyone joined in on the cheer. Alphabet, Amazon, and Meta saw slight slides. Now, zeroing in on Tesla, a notable player today. Tesla shares took a steady ride upward. Reports showed them hovering between $344 and $349, marking a rise from the previous day. This upward trend has been brewing following a tight first quarter. Can you believe it? Over the past 12 months, Tesla's stock soared nearly 97%. Not too shabby for a company known to keep investors on their toes. Options activity for Tesla showed a significant boost as well, especially the $350 call contract for June 6th. Meanwhile, implied volatility saw a drop, pointing towards stabilizing market sentiment, although analyst views on Tesla's future remain divided. With price targets ranging as low as $19 and as high as $500, Tesla certainly sparks a wide array of predictions. Notably, Goldman Sachs had a more conservative outlook, whereas 24/7 Wall Street showed optimism with targets just above current prices. Shifting gears to Tesla's global footprint, Australia saw a remarkable sales rebound in May, notably with the Model Y leading the charge. This was a dramatic comeback from shipping delays. Such regional swings reinforce Tesla's dynamic market presence. From Australia's victory lap to European hurdles, where a sharp sales decline contrasts Norway's promising surge. A bit of drama on the company front. Elon Musk made headlines by sharply opposing a new tax bill via social media. This follows Musk's resignation from the government's advisory realm, adding layers to the ongoing narrative about his leadership and public stances. Now, looking at broader financial tales, the market sentiment today seemed buoyed by a pause in U.S.-China trade tensions, aligning stocks with their all-time highs. Meanwhile, U.S. Treasuries and the dollar showed little movement, although the U.S. dollar index edged up slightly. On the commodities scene, a rise in oil prices contrasted with a drop in gold, while metals like palladium and silver kept climbing. These trends often echo broader market movements, making them essential bars to watch. Amidst this economic dance, job openings surged beyond expectations, pointing again to the U.S. market's resilience. However, manufacturing orders witnessed a slip, perhaps hinting at challenges lying ahead. As for the global growth forecast, the OECD's recent downward revision frames a sobering backdrop, largely due to trade concerns. For investors, keeping an eye on upcoming U.S. job reports and PMI data will be critical, along with the Bank of Canada's next rate move. Before we wrap up, remember, in the world of investing, diversification remains key. The ebbs and flows of today's market remind us to weigh both opportunity and risk. Thank you for joining me on this journey through the financial landscape. As always, when the dust settles, only the truth remains. See you next time on Tesla Stock Daily Drive.